Hi, in this video I'm going to explain to you the different types of cash flow. So this is really interesting knowledge for business owners or for investors, because effectively, as I said before, something called the cash flow quadrant. I think Robert Kiyosaki implemented this or introduced this. So the cash flow quadrant is basically on the left hand side you have employees, top left. The bottom left you have people who are self-employed. On the right hand side, which is what I really like, you have top right business owners, and then bottom right you have investors. So let's get into the different types of cash flow that exist. OCF, which is called operating cash flow. Now, operating cash flow comes from operating a business. So effectively, if you have a business and you make sales, that is basically increasing your cash flow. It's called money coming in, expenses, money going out. Now, the term cash flow itself should be explained, because cash flow means money coming in and money going out. What's left back behind is called your cash balance. So OCF, operating cash flow, only comes from operating a business, from operations. Yeah. Again, revenue is money coming in, expenses, money going out. You have a positive cash flow, means you have more money coming in than you have money going out. That's called a positive cash flow. Negative cash flow, more money going out and more money coming in. We got the ICF, the one I like a lot, because ICF is investing cash flow. Now, investing cash flow, even if you're not a business owner, you can still get investing cash flow. You can get investing income. For example, I invest in properties, and from property, you can get rental income. Rental income is an investment income. But when you put money out to buy the properties, that's also investing cash flow. Again, money going out is money leaving your business, and money coming in is money coming into your business. Even if you're an investor, that is still cash flow. Cash flow means money is moving around, guys, yeah? So ICF is all about investors, investing cash flow. And FCF I also like, because FCF is financing cash flow. And financing cash flow is where you can use other people's money, the OPM strategy. Effectively, you can borrow money and use that money to go and buy assets to give you income. Yeah, which is investment income. So if you are somebody who say you want to start investing and you haven't got money, you can actually leverage people's money. That's the three cash flow I just explained, which is obviously OCF, operating cash flow, which is obviously FCF, financing cash flow, and ICF is in the middle, which is investing cash flow. Even though you're an employee, you should have multiple bank accounts. I mean, why have multiple bank accounts? Because you want to have a separate account for your income or for your operational stuff, and you want to have a separate bank account for your investing, yeah, and a separate account for your saving, your rainy day bucket. But this concept I'm giving you here is based on the profit first system, and what the profit first system says is basically you want to have these 5 bank accounts. Let me explain them. I think I put it in a video before. I'm going to break it down for you. If you're a business owner, you want to take notes on this. The profit first system basically says that the first account you're going to have is something called an income account. All the money coming in should be in one bank account, which makes sense, right? From there, you're going to move money out into your expenses account. But really and truly, what you want to do is calculate your profit and put the money first into the profit account, then pay yourself first, pay expenses, then pay tax. So always pay the tax man last. If you're an employee, you're paying the tax man first. That is really bad. You know, if you are a business owner, you want to pay the tax man last. Pay yourself first. So just to go over those accounts again, the first thing is your income account, where the money is coming in. From there, you can have direct debits based on fixed percentages. If you want the percentages, send me an email or at roy@mmedu.co.uk, send me a DM, and I will help you to work these percentages for your business. Once you start getting money in, as I said, you have a separate account to pay yourself first, then you work out your profit, then you have your expenses, and you have your taxes. That's called the profit first system. And I've probably said it before. Money is not everything. Of course not. What matters, of course, is happiness, right? Health, happiness, family. That's the most important thing in life, right? We all deserve to be happy. We all deserve to have family time. But we know that money helps us to be happy. That's what I believe. Money helps you to have a good life. So what Zig Ziglar said, he said, money is not everything, but it's right up there with oxygen. So all I'm saying to you is that become an investor. Become someone who learn how to make money work for you so that you don't always have to work for money. For those of you who don't know me, I'm a finance expert. Literally, I'm a qualified accountant. I have 30 years experience in finance and business. I spent 20 years working in financial services across insurance, asset management, and banking. I've written a book on the topic, and I'm writing the next book this year, and I play the game at the highest level. When I say the game, what do I mean? I play Monopoly in real life. So if you are sitting there and you want to start moving some money around, you want to do a business, you want to get into investing, you want to do the stock market, you want to learn the trade, get in touch. Until next time, all the best wishes from me, Royston Andrew Cumberbatch. Be good to yourself and be good to others.